All right, day 34 of my journey to a $500,000 stock market portfolio. So I'm going to start with my equity, and then I'm going to talk about some trades I made. So my equity stands at 81,401 right now. Market is still open. So first of all, I did some earnings trade today. If I go to my margin account, I did an earnings trade on Visa. It's an iron fly expiring tomorrow. Visa has earnings coming out today. So basically, I sold the 175 call and the 175 put, and then I bought for protection the 180 call and the 170 put. So my max loss is the difference between the strikes, which is $5, and the credit that I received. Now the credit that I received is $3.58. So my max loss on this trade is $1.42 times 100, of course. So $142 is my max loss on this trade. My max profit happens if Visa closes tomorrow at exactly 175. It's not going to close at 175, but anything in between 175 and the credit that I received will be a profit. The profit will change depending on where Visa lands. I did an iron butterfly as well on Verizon. It has earnings tomorrow morning before market open. So same thing, I went with a 60.5 strike, sold the call option at 60.5, sold the put option at 60.5, and then I went 2 points wide. So my max loss is $2 minus the credit that I received. I think I received about $1.05. So my max loss is about $95. Also made an earnings trade on Amazon. This one's an iron condor. I went 70 points on each side. So Amazon was trading at 1780. I sold the 1710 put and I sold the 1850 call. So 70 points higher and 70 points lower. I went 2.5 points away with. So my max loss is 2.5 minus the credit that I received. I received $108. So my max loss on this one is about $142. So max loss is $142. Max profit is $102. $108. But this max profit is achieved as long as Amazon stays anywhere between 1710 and 1850. If it goes outside that range, then I start losing money and my max loss is capped at $142. I've got two other earnings trade in place, but they haven't been filled yet. Intel and Capital One. I have an order at 195 for Intel. Right now it's trading between 192 and 198. I guess I could change it to 194 maybe, but I find that 195 is exactly in the middle. I mean, it should get filled. Maybe if I drop it to 194, then it gets filled. See, it's coming back up. I'm going to leave it to 195. Still have 20 minutes to go. Capital One, it's an iron fly as well, 4 points wide, but I can collect about 250. That means my max loss is 150. And right now I'm asking for 257. It's not going through. I'm going to drop it down to 255. So I'm going to go through. I'm trying to put an iron condor on the Russell 2000, but it's not going through either. I feel like I'm right in the middle, but it doesn't want to go through. I'm going to stick to this price. I mean, I'm right in the middle. It should get filled. Usually on the index, it gets filled right in the middle. I've got a 1620 call and a 1470 put on the Russell 2000 though, expiring in 45 days, so December 6th. So obviously after Tesla went up like crazy after earnings, I almost lost $340 on Tesla. I was going to place an iron condor on Tesla between 233 about and 275. I was going to collect $160, risking $340. If Tesla stayed within 233 and 277, I make my max profit of $160. My order didn't get filled. Luckily, it didn't get filled because if it did get filled, today I would have lost $340 because Tesla went way past my 277 call or 275 call. And now I'm trying to sell a call spread on Tesla because I think it went up too much already. I think at 325, I'm trying to sell the 325 for November 15. I don't think it's going to surpass 325 by November 15. I'm trying to collect the 97 cents, but it's not going through because it's not even close. But that's the price I'm comfortable at right now. It's between 77 and 91. So I just leave it open in case Tesla jumps up. And this one here, I'm trying to close if I go to my positions in my margin account, I've got American Airlines here. I decided to roll over the call option at 27 because it expires. The old option expires tomorrow. And of course, American Airlines jumped to 29. So in order to not lose my shares at 27, my costs on these shares were about $31. I decided to roll over the call option at 27. I collected about, I think, $65 or 65 cents of credit. Now I'm hoping that by December 20th, the stock drops back down to 27, or else I'm going to have to roll it over again. Keep collecting, hopefully for a credit though. But if American Airlines goes to $35, then I won't be able to do that anymore. I've got this vertical put or put credit spread on Boeing expiring November 22nd at a 300 put. Collected $80, and after earnings, Boeing jumped to 350 almost. Right now it's at 344. So as you can see, I collected $80. I can close this trade already for about something in between 88 cents and 40 cents. So I can close it for about $25. So 80 minus 25 gives me $55, but minus commissions of about $12. I'm down to probably 40 something profit, net profit. So I think I'm going to hold on to it just to avoid the commissions. So this is the one I'm trying to close here. A put spread on IWM expiring November 15, 140 put. This one's showing me a very good profit. Actually should go through. My request is 7. My bid is 7, and it's already at 7 here on the ask side. So it should go through. Reason being is, yes, my put is very far from the current price, but if we do, I only have 3 weeks left. And if we do crash or get into a correction, I won't have time to watch this rebound. I could be in trouble trying to manage it. So why give myself the headache? It's showing a very good profit. Just close it and remove the risk. I think right now it's best to sell calls because we're at close to all-time highs. So it's safer, in my opinion, it's safer to sell calls. So any puts that are showing me profit, I'm trying to close. So MasterCard expires tomorrow. This is 100% profit I'm proud of. I think I collected, I don't remember, but it was a good amount, like $80 probably or $90. And I don't have to buy it back. It's going to expire worthless. Nvidia is causing me trouble though. 196. This I collected 80 cents. It's trading at 147 right now. So this one's causing me trouble, but I have 2 weeks to go. So I'm going to hold on to it, but I might have to manage it early. Roku's doing well. November 15, sold it for $80 at a 160 call. Right now it's at 131, so it's still safe. But Roku has earnings though before November 15. That's why premiums are high. But after earnings, if Roku doesn't go up or doesn't go past 160, then the premiums are going to drop hard. So I've got this SPY call spread expiring tomorrow, which was at a 308 strike, so it didn't come close. So I'm going to keep the profit or the credit that I collected here. I don't have to pay commissions to close it. This one as well will be the following week, October 30th. Looks like it's going to be expiring worthless as well at a 307 strike. I almost closed these two trades together. So it's a good thing I didn't. I get to let them expire worthless. I don't have to pay commissions. I've got this one here that I could start closing early. Expires November 22nd. It's showing a small profit, but not 50% yet. I think I collected 91 cents. Right now I could close it for 64 cents. So it's not 50% yet, so I won't close it. I had to roll over Uber because it expired tomorrow at a 31.5. Right now it's trading at 33. So I rolled it over to November 1st, so next week. Collected, I think, about 30 cents or 35 cents. So collected an extra credit just to roll it over for the following week. So now I'm trying to get my order executed here. This one I would like to get executed at 15. Right now the Russell 2000 1550. I mean, I picked a 1620 call, so it's pretty safe, and 1470 put. I was thinking initially of selling only the call side, but I don't know if I feel bad not collecting the extra credit from the put side. In case the market just keeps going up like it's going, then if this one gets in trouble, well, at least I collected something from the put side. If we drop hard, this side, the put side will get tested, but because I have 45 days to go, I have a good chance that it rebounds and starts going back up again, because this is an index. So usually index always, over time, index goes up from what I've seen, unless we're in a bear market. But right now it looks like we're in a bull market or ready to crash at any moment. All right, 255, I'm gonna bring it lower. Capital One, Intel, let's see where we're at. See, Intel dropped to 52. My strike is 52.5. Maybe I could adjust my strikes to 52. But I'm also slightly bullish on Intel. I think it's going to go up after earnings. So it would be safer for me to leave my short strikes at 52.5. Right now, I would have to collect only 191. So I'm going to bring it down to 193. And then Capital One, I can adjust again. Let's try 251. Nothing. Intel, let's go back. I might have to change the strikes on Intel. No, it should be fair. 193 should get executed. I have 10 minutes left. Yeah, I'm going to leave it like that. Capital One, I might have to change. So 244, 258. All right, let's try 250. I'm surprised this one's not getting executed. Oh, my order is at 6. I thought it was at 7. Okay, that's why it's not getting executed. So if I really want to close it, I could just change it to 7. But I'm picky like that. All right, let's look at Capital One again, 250. I'm 8 cents away from the bid, and I'm 7 cents away from the ask. So it looks like I have to go lower. What's my range here? It's $4. So right now, my max loss is $150. I think I'll stop at that. Let's go back to Intel. This is a $3 range, so my max loss is about $100. Yeah, I think it's good. I'll leave it at that. It should get filled. Do have 10 minutes though. Okay, yeah, so I think I'll leave it at that. I'm trying to roll over my call option on the Qs. I had a chance to roll it over for an extra $1, but when the Qs go up, the time value of the option that I own goes down. So now if I want to roll it over, it's going to be for about $75, $76. But this morning I had a chance for $1. I didn't take it. I placed the order for $1 after, hoping that it reaches back $1, but it doesn't look like it's going to happen today. Hopefully tomorrow the Qs drop a bit so I can get at least $1 out of it. If not, it'll be around $75, $80. So why do I do that? So basically, I bought the stock at 191 or the ETF at 191, and every week I'm trying to collect something out of it. So if I'm able to collect $1 for the following week divided by 191, if I annualize that, that gives me an annual return of 27%, which I'm very happy with, because I don't have to time the market. I don't have to look for a stock to buy at a discount and then wait till it goes up to sell for a profit. I just put my money in the Qs, the ETF, and then every week I just sell call options against it, generating income. All right, so this was day 34 of my journey to a $500,000 stock market portfolio. If you have any questions, leave them in the comment section below. Like always, if you're going to open an account with QUESTRADE to trade on the stock market, which is the layout you see here, use my referral code in the description below the video to get up to $250 back. Thanks for watching.